Welcome back. And in our top business story, Emirates Cooling Corporation, Empower, has announced that the consumption of district cooling provided by the company rose 23% in July from the same period last year. According to news agency WAM, Ahmad bin Shafa, the CEO of Empower, was quoted as saying that the rise is off the back of Empower's higher occupancy rate that reached 16.1% in Jumeirah Beach residence, Al Khail Gate, Dubai International Financial Centre and TCOM. He added that with every increase in district cooling consumption, there are savings being made in electricity and water consumption in Dubai. District cooling is a part of the country's green initiative, where water is cooled in central plants and distributed through a network of piping systems to individual customer buildings. The UAE's real GDP grew by around 3.2% in 2011, according to a UN report, off the back of higher oil prices and production, and has been forecast to grow by 3.5% this year. Other members of the GCC are also expected to see strong growth in 2012 at a rise of 4.6%. The report showed that real GDP for the GCC rose to 5.7% in 2011, up from 4.4% in 2010. The report added that growth in the GCC countries is mainly driven by the oil sector, but the non-hydrocarbon sector is increasingly contributing to growth. In Saudi Arabia, the non-oil sector was seen to have grown by 5% in 2011, one of the highest growth rates in decades, and is expected to remain at 5% this year off the back of high public spending, investment and increased private consumption. Overall land value in Dubai rose 10% over the last year, according to new figures released by the Dubai Land Department. The figures showed that values per square foot in the Al Barsha and Al Nada areas rose 13.8% and 9.6% respectively from June 2011 to 2012. For the Al Barsha area, the price per square foot rose from 766 dirhams to 872. This comes off the back of Nakhil's announcement last week that some of its properties on the Palm Jumeirah rose by as much as 30%. The number of valuations undertaken on behalf of private owners for sales purposes rose from 12% last year to 17% so far this year. And let's now take a look at the stock indices across the GCC. And looking to other business news now, markets were driven higher as the US dollar weakened following comments from the US Federal Reserve as they announced through their meeting on Wednesday that US policy markets were leaning towards introducing additional easing measures for the US economy. So to discuss this further, we early spoke with Gaurav Kashyap, the head of the DGCX desk at Alpari Middle East.
It was a key week for the US dollar last week as traders focused on the release of the FOMC meeting minutes on Wednesday to get an insight of what the Federal Reserve's views are towards additional easing measures. Now, of course, on Wednesday, we did see that the US Federal Reserve members are leaning towards additional easing, barring a significant recovery in the economic situation of the US. But of course, this saw the US dollar weakening tremendously across the board. But then on Thursday, we had some mixed statements coming out of the Fed once again, when James Bullard, who's a Fed member, said that the market should not expect too many gigantic measures from the Fed with regards to additional easing. Once again, the focus in this week will continue towards the Federal Reserve when they convene on August 31st, that's this Friday, at the Jackson Hole Economic Policy Symposium. Once again, investors will be picking apart Ben Bernanke's comments when he's speaking in Jackson Hole with regards to their views on additional easing for the US economy. Right now, we're looking at probably a 50-50 20% chance that there could be additional easing members come September's meeting. But once again, we have a key week of data coming from the US which could influence the Federal Reserve with regards to these easing measures. We have personal income readings, we have consumer confidence coming from the US, and of course the key headline number will be Wednesday's US GDP reading, which is expected to be slightly better than expected at 1.7%. So once again, these will be the key drivers with regards to how Ben Bernanke will act and if and when he will be announcing easing measures. If he does come out with some strong concrete confirmations of easing like he did famously 2 years ago when he announced QE2 at Jackson Hole, then you will see a significant weakness in the dollar. But once again, if he refrains from announcing any concrete measures, the dollar should be in for a good round of gains.